All right, thank you everyone for joining us today. I will get started with a few of kind of the logistics of the call here. My name is Marcia Zappa and I'm the Director of Marketing and Business Development at Affiance Financial. I'll be moderating today's conference call. I want to start out by clarifying that this is a call, not a presentation, so there are no visuals. If you are joining by phone, that means you aren't missing anything. Due to the number of people on this call, all participants have been and will remain muted. If you have questions and are joining by computer, I welcome you to use Zoom's Q&A function to submit those questions. I will be monitoring it during the discussion and will do my best to facilitate live answers to your questions. If we are unable to answer your questions during the call, we will follow up to the best of our ability, but please don't hesitate to reach out to your personal advisor as well. Today we have Principal and Financial Planner Andy Fishman, Principal and Financial Planner Steve Lear, and Principal and Chief Investment Officer Seth Meisler with us. Andy, will you please get us started?
Absolutely, Marcia. Thank you, and thank you again for coordinating. I hope everyone is still safe and healthy. We definitely want to pass on that and our thoughts to everyone. We do appreciate and thank everyone for their continued interest in these calls. Your attention and patience as we all work through the COVID-19. We thank you for that. We are steadfast and committed to working hard every day for all of you, our clients. It is our mission to be present and available as situations change or require action. We are honored to have such engaged clients who are interested in what we have to say. That said, we've decided to take 1 week off. We're going to take a small break and come back in 2 weeks to provide another updated call. As Seth will share later, we are seeing a surprising amount of market recovery. Whether or not this is just the calm before the next storm is yet to be determined. But for now, we think it's a good time to take a 1 week break, and we will start these calls up again when the situation has changed, which is more than likely will take place in the next 2 weeks. When we have, and we will hopefully have more information at that time to report. Seth, can you provide, again, a little bit of an update as to where we're at currently?
Sure. Thank you, Andy. Before we begin, I'll start with an important disclosure. Please remember that with investing, there can be no assurance that the content made reference to directly or indirectly in this conference call will be profitable or suitable for your individual situation or prove successful. Due to the various factors, including changing conditions, the content is only reflective of current opinions or positions and is subject to change at any time and without notice. Moreover, you should not assume that this call serves as a substitute for personalized investment advice from Affiance Financial. Please remember to contact Affiance Financial if there are any changes in your personal financial situation or investment objectives. And on to the updates. So while it was expected that government intervention would help settle the markets, it's frankly been surprising to us, at least, the level of market recovery, particularly yesterday. At this time, it appears that the market's pricing in a return to normal sometime in the May-June timeframe. And as such, our expectation is that markets are going to be somewhat quiet and in a rebuilding phase. The big question is whether the current economic freeze ends by the second quarter or if this continues into the third quarter and beyond. If we go back to normal in the third quarter, then I think the worst could be behind us. However, if the sheltering in place continues and or resurfaces in the third or fourth quarter, at this point, we don't believe the market has currently factored in that possibility, and this would likely cause a further drop in the markets. It's also likely, on the positive side, that the market has not factored in a vaccine or therapeutic treatment. So there is a potential up for the market if and when this is announced. In addition, Congress is already discussing an additional stimulus, all the while cash related to the first stimulus has not yet made it to individuals or businesses. We have been told that that cash is coming. Some other interesting notes. On the positive front, we are seeing data that actions being taken such as social distancing and shelter in place has been making a positive difference and causing a dip in the numbers infected. On the negative side, LendingTree recently did a survey of small businesses and asked them if they felt they would be able to come back after this was over. 71% of respondents said no, they will not recover from this. Note, it doesn't mean that they're going to go out of business, but it certainly means the landscape for small businesses is going to be different, which is a pretty sobering statistic. So overall, not a huge change since last week, as we're beginning to see data that's been confirming our earlier estimates. Last week, we talked a little bit about the CARES Act and some of the provisions, and I want to do a deeper dive in just one aspect of the CARES Act, and that's required minimum distributions, or how we call it RMD. The CARES Act waives required minimum distributions for 2020, and that waiver applies to traditional IRAs and workplace plans like SEP IRAs, simple IRAs, 401ks, 403bs, and 457 plans. Both inherited Roth and inherited traditional IRAs are also impacted. 2020 required minimum distributions are waived for inherited IRAs. If you already took a portion of your 2020 RMD, required minimum distribution, you can stop taking distributions for the rest of 2020. There is no requirement to take the rest. You can roll over or replace the RMD if you took it. However, keep in mind that there are rules about putting money back into your IRA. Those distributions, though the distribution qualifies under the normal rollover rules, which is not more than 60 days since the distribution was taken and no other rollovers within the previous 365 days. If you qualify, then yes, you can replace the RMD payment. Non-spouse beneficiary owners of inherited IRAs cannot do 60-day rollovers, regardless of the type of distribution. Once the money is withdrawn from an inherited IRA for a non-spouse beneficiary, it must stay withdrawn. You can go ahead with a conversion and or rollover without concern about taking your 2020 RMD first, because there's no RMD to take. You can also take a qualified charitable distribution out of your IRA. Finally, there is some confusion between the required minimum distribution rules and the early distribution rules related to coronavirus. Keep in mind that those rules related to coronavirus are different than the RMD waivers. They're separate and distinct guidelines. If you are an affected person by the coronavirus and your voluntary withdrawal from your IRA is a legitimate coronavirus-related distribution, then you can follow those rules. Otherwise, those rules don't apply to you and you need to follow the RMD waiver guidelines, as we've elaborated. For those that are taking RMDs, we are working on a plan to reach out individually to you to evaluate your plan. So expect to hear calls from your advisor in the near future. And with that, Steve, I turn it over to you.
Thank you so much, Seth. And Andy, good to hear your voice again. Marcia, thank you so much for organizing this. And Eric, thanks for putting the agenda items together. I want to conclude with a couple thoughts. One, Seth, that was a lot of information you gave us. Like, how are we supposed to absorb that? What do you want us to do with all that information?
Yeah, it is a ton of information. And we're going to be doing two things. One, as we discussed, for those taking required minimum distributions, you'll be getting an individual phone call to discuss your personal situation from your advisor. The second thing is that we will be sending out printed material explaining all of the required minimum distribution rules as well as CARES Act rules, so you can read it at your leisure.
And wouldn't you say at this point in time, one of the things that we can do to counter exactly what's going on is to try and save taxes when we can? Would that be accurate?
For sure, yes.
Okay. So that's just with all of Seth's great knowledge about these types of things, we'll get that information to you. And for those who are in required minimum distributions, expect a phone call from some of us. I just counted it up, and this is the 7th time in my career that I've gone through this type of stock market experience. Every one of them has been because of a different reason. So the reasons they come into existence are different, but the performance of the stock market has been very similar. There's two people that I want to kind of reach out to. One are all of you who are parents. Steve Drost in our office, congratulations to you. You just had a new baby. That's absolutely wonderful. But to all of the parents, I have 7 children. So I'm listening to my kids and they're nervous. You know, what is going to happen with their jobs? What's going to occur there? I'm pleading with you to hang in there. The 7 times that I've seen this occur, the other side of it has been incredibly exciting. There's been a new world. There are people who are adaptable, can truly take advantage of what goes on in the new world that comes after such an event. And to those of us who are grandparents, our kids need us. My wife's doing a great job talking to the kids each and every day as I'm having the chance to talk to you. But they need us. They just need the sounding board, and they need to know that things will be okay eventually. I just wanted to remind everybody that we're going to take a 2-week break. We're going to celebrate Passover. We're going to celebrate Easter. I think it's a lot of, you know, we call it, we're having a Zoom Seder is what's going on. Please enjoy your family as much as you can. May it be kind of a time of family and comfort with friends. I want to do one last thing before I hand it back over to Marcia. We are open. If there are people that you care about, that you are concerned that they're in quite a bit of stress or something of that sort, or they don't have the planning that you have gone through, it would be wonderful to have the opportunity to talk to them. All they need to do, they need to grant us permission to be able to call them. If you have anybody in that position, we're here for you, which is the most important. And then for people that you care about, we'll be more than glad to assist. Marcia, with that, I'm bringing it back to you.
Fantastic. Thank you, Steve. We do have one question, and please don't hesitate, others listening, to type in any questions you might be thinking of right now. The first one, I would like to mention that Mark Usum is also on this call. Mark, financial planner and co-chair of the Investment Committee. So Mark, I'm going to ask you, is there any wisdom in harvesting tax losses now?
Hey, thanks for that. Yes, tax loss harvesting is something that we actually have done sort of by default when we rebalanced portfolios several weeks ago. We are continuing to look at doing more tax loss harvesting, and so that is definitely on our radar screen.
Okay, Seth, did you have anything to add to that?
Yeah, I just, it's something we mentioned, I think, way back in our first call, but something that we still like for the right person is Roth conversions as well. I mean, the markets are still down from where they were in the beginning of the year. And so Roth IRA conversions could still be a good strategy for the right person.
Okay, thank you, Mark and Seth. That is our only question at this moment. I think we will all hang out for a few more minutes and see if anyone types anything in. Perhaps it is just too beautiful outside and, and everyone wants to be able to soak in the last few rays of sunshine. So our panel, oh, all right, just a minute here. Let me see if we've got something new to talk about. Okay, Mark, I have another, we do have another question here. Not sure if you've even looked quite this far into the future yet, but are there any projections about what may happen to the markets around the times of national party conventions and the election, as it is an election year?
Well, we have looked at that. In fact, we've shared some information at some of our meetings, like our market outlook earlier in January, and we definitely know the history is that in election years the market return tends to be a little bit behind, I guess, regular years, but after elections it tends to have better returns than average. So going into elections, it tends to be a little more volatile. And I would expect that to be the case in this election as well.
Okay, thank you. Andy, did you have something to add on harvesting tax losses?
Yeah, I just wanted to just clarify a couple. One is that that is not our objective. Our objective, of course, is not to lose money. But when we end up in I guess, a major dislocation in the markets, we do want to execute a strategy of taking advantage of a loss, but yet turn around and investing virtually at the same time in some stock that might be similar, so that we get to take advantage of the loss, but yet we don't get out of the market for any kind of turn or upside that might happen from there. So that's the objective of harvesting tax losses, and we will continue to look at opportunities for that.
Okay, thank you, Andy. Seth, I think you've probably been doing the most comprehensive research on the bailout. Do you have any thoughts on how the government bailout will help business owners?
Yeah, it's been a very fast-moving target here. Literally, last night, the Treasury Department and the Small Business Administration posted an 18-point frequently asked questions to address issues. So literally, I mean, some of this news is hot off the press. So I would say they are doing specific programs such as the Paycheck Protection Program, PPP, and small business loans. I think I would not do it justice to go in here, but you can call me out of this conference call to discuss what are some of the things that are available, as well as I would suggest small business owners to be having a conversation immediately with their banker with regards to trying to access small business administration loans.
Okay, thank you, Seth. And I think that is all the broad questions we have at the moment. So once again, our panelists will hang out for a couple of minutes if anyone else has anything that they like answered. Okay, we have a question here for Steve. Steve, I think you could answer this for us. What effect, if any, does the current situation have on distributions from an annuity?
The short answer is that it will not have an effect on distributions from annuities that have the living benefit riders on them. So some of the annuities that people own do not have that rider. Many of them do, but that's a key issue to always examine, of whether you have the living benefit rider. That living benefit rider is really coming into effect at this moment in time. The insurance companies that, as far as I know of, have created hedges to find the protection. And at the moment, they're basically taking distributions from the pots of money that are already in the annuity. We're not into the annuity company's pot or pockets yet. But that is The purpose of the annuity was to create a lifetime income and a withdrawal from them. So I'm anticipating no change whatsoever in those annuity payouts. And anybody who has one, you need to call your financial advisor if you have a major issue about your particular annuity. Every one of those annuities are a little different, so it pertains to each client.
Great. Thank you, Steve. Mark, how about market change projections around the petrochemical industry, oil prices, coal, etc., and the growth of environmentally sound energy sources? Have we, I know there was some big change in oil prices today. Have you given any thought? Is there anything you can speak on that topic?
Well, the oil market has certainly been through a very difficult period with the oil price war between Saudi Arabia and Russia erupting about the same time as coronavirus. So that was an unfortunate situation. We know that oil price stabilization has
Oh, Mark?
yes.
Oh, I think you may have cut out for a moment. Could you just go a sentence back?
Just saying that OPEC has been working with Trump and with Russia to try to figure out their next moves, and clearly they're trying to cut production to get prices back up a bit now. I don't know how far it'll go. It's hard to tell, but my guess is at the kind of oil prices that we were at recently, it doesn't really help anybody. Although the consumer likes it at the pump, you know, you have sub $2 gas, so that's a nice tax cut. But in terms of looking forward, we still, even with OPEC eyeing cuts, we still have excess supply in the oil market. I don't think we're in for a huge recovery in that market anytime soon, although we could see some normalization. That being said, the question was about alternative sources, and alternative sources continue to grow. They grow both voluntarily and by mandate in some places. You know, is it going to replace fossil fuels? Not in the near term, but it will continue to grow. It'll continue to grow faster than the oil markets. I don't know if there was a specific, you know, question about what that means, but I don't think that alternative sources are going to be the death knell of oil anytime soon.
Okay, thanks, Mark. No, I guess I didn't interpret a real specific question in that either. Just thank you for offering your thoughts on the topic. Hopefully that was what our listener was looking for, what our client was looking for. And with that, I think we will wrap it up for today. We don't have any additional questions. Thank you all again for being here. We do appreciate it so much. And we will talk again in 2 weeks.